Bingo. There we go. All right. Let's share my screen. Yep, on my second monitor. All right. So we had a lot of things happening recently. We had major earnings. We've had speeches from the Feds. We're starting to see that the Feds are planning to do rate cuts. I kind of mentioned this a while back that people thought that, oh, okay, when the rate cuts actually happen, the market should go up. And I'm like, well, once they signal that the rate cuts are actually going to happen, we could see a slight pullback because we don't know when they're going to happen and how deep the cuts are going to be. And then we also don't know what other impact it will have, in different areas, or on different sectors actually. So that was one thing I was interested in seeing is, okay, we do have the rate cuts on the table, but then now the market is selling off. When we're unsure about the rate cuts, the market was roaring. So this is going to be an interesting move. But again, the pullback is going to give us a lot of opportunity just to buy some of our favorite names. Some of the stocks that we thought that were too expensive at one point in time, this would be a good time, especially stocks that top tech stocks in the S&P 500. This would be a great time to get in, get a nice holding, and then just sit and let it mature moving forward. So let's take a look at the economic calendar. All right, so where are we at? This is July. So this is what? Last week's calendar? I need this week's calendar. All right. So it doesn't look like we have anything crazy happening this week aside from the PMI that's coming out tomorrow at 10, which, I mean, reports on inflation right now. I'm not going to say they don't matter anymore, but unless we get something that's, astronomical or that's very unusual, I think that the Feds are pretty much going to cut rates regardless at this point. Jerome Powell said that we don't have to wait until the 2% mark to go ahead and cut. So I'm thinking that we could get some rate cuts in September and November. Let's turn this off. See what else we have. We don't have anything too much happening this week. So it should be a steady trading week. I think that we may pull back Monday and then going into Tuesday throughout the week, we could see a rebound. Again, stocks don't go up continuously, but then they also don't drop down continuously as well. There's always some stop points. There's always some levels to find access to where you can set up some trades and make some nice plays off of a bounce. All right, Thursday, we do have initial jobless claims. This comes out every Thursday, and normally, again, when we're looking at rate cuts, you want to pay attention to inflation reports and job reports. So the initial jobless claims, again, as long as the numbers are pretty close, which they have been, we can see that the right here where it says initial jobless claims, forecast 250K, prior were 249. So again, if it's close, market should stabilize. But if we get something, that comes in different, then it's like, okay, now we have to pay attention to it. But I think everything should be stable at that point. And that's it. So yeah, pretty normal week. We do have earnings. If you're interested in finding stocks that have earnings, you can always go to the earnings calendar. I'm not going to go through all of this, but we do have like AMR. I know AMR is a pretty good one. We do have a few other ones, Yum, few other ones that are set up to Avis, that's set up to happen to have earnings this week. The major tech stocks had earnings last week, which some were up, some were down, but then we also have to wait for Nvidia's earnings, I want to say on the 28th. So Nvidia's earnings is going to be interesting because Nvidia was the stock that was holding up the market for a while, and we're going to see if that remains true on the 28th. So let me, someone's mic is unmuted. Someone's mic, muted.
Oh, can you post a link to your website?
Oh. Yeah, yep. I can put the Mark, can you put the link in the chat forum? Sorry about that, Northlake. All right, let's keep it moving. Yeah, Northlake, Mark is going to put the link in the chat. I don't know what website he's referring to, but Mark can answer that in the chat for you. All right, let's look at the S&P 500. So let's take a look at the indicators that I like to use. Again, these indicators are great for swing trading. You may want to use a different set of indicators for day trading or scalping. I know a lot of people like to do that, but these indicators could be used for day trading and scalping. It just depends on the numbers of like the MA ribbon, so on and so forth. But for swing trades, which I think we're kind of in the swing trade territory now with the market pulling back, I think that these indicators are great. All right, so we're going to start from the top and go to the bottom. Really simple and easy setup once you know exactly what you're looking at. So the first indicator is the RSI. The RSI is simply a gauge to tell you if a stock is hot or cold. The way that I like to use it is just reading the numbers on the right-hand side. And if a stock is hot, that means that it's going to be oversold or nearing oversold. I'm sorry, it's going to be nearing overbought. A lot of people are going to be buying it up, and the stock is going to be becoming hotter and hotter, right? You don't want to touch a stock that's too hot. For instance, if you look at the top of the RSI chart, you can see that this goes up to about 70 on the top side, right? So buying a stock that has an RSI number, this is the number here at 38. If it's 65, 70, you want to stay away from it because every time it gets around 65, 70, it tends to pull back because it's too hot, right? So let me see in the chat. Yeah, you can also, you can reach us in the Discord. You can also message us, Northlake, through Meetup. If you're in Meetup, you can also do that as well. But yeah, so again, around a 70 RSI, you want to be careful because you can get a pullback. You see that we had 70 here, pullback. We topped at 77, had a pullback below, still above 70, another pullback. This got into the low 80s. This one is in the mid 70s, and we had a steep pullback. So what you want to do is just gauge this number. Again, 60 to 65 is too high, especially if you're looking for a swing trade, in my opinion. What I would like is 45 to 55 pointing up. So when I'm looking at the RSI, if I'm looking for a swing trade, and let's say I want to buy stock today and sell it in a month, right? If I want to buy today and sell in 3 or 4 weeks, I would be looking for a 45 to 55 RSI and pointing up, and especially on the daily chart. So you can look at the day, you can look at the 4-hour, the day, the 1 week, and 45 to 55 on the RSI is what I like. Now, if you want to hold a little bit longer, if you want to go further out, let's say if you want to buy a stock today and hold it for 6 months, then a 38 RSI like the one we have today may work. That may be fine for you, right? So a lower RSI works if you're willing to hold the stock longer. So right now, the SPY is at 532. At one point, it was at about 562. And if you're willing to hold it until it gets back up to that level, buying a 38 RSI is not completely crazy, right? But again, normally you want to buy something that has momentum and that is already on the way up. So that way you can hop in on the ride up, and then once it reaches a certain level, you can hop out, right? So that would be the best way to use the RSI on a daily time frame. Again, 45 to 55 pointing up is the hot spot. You hop in at 45 to 55 pointing up. You take it up to about 65, 70 and take profit. Again, if you want longer, you want more gains, but you want to hold the stock longer, you can get all the way down to a 30 RSI. But just know that you're probably going to have to hold it a little while longer because you're coming up a further distance, right? So if you look down here, RSI was at 31. For it to get all the way up to 70, it took a while, right? This is, it took about a month. This is what, mid-April? This is, mid or late May. So about a month and some change it took to go from 30 to 70. Now, is it always going to be that fast? No. But again, patience is the name of the game when you're looking at buying a low RSI. All right, let's keep it moving. All right, the main body of the chart. So there's a lot of different things going on here. I'm going to hide a few of them. All right, when you're looking at the chart, one thing that you like to do is that you should do, and that I like to do, is notate the key levels. So the key levels are going to be notated by these blue lines, and the position of the blue lines in relation to the actual stock price will give it give the lines their definition, right? So for instance, the stock price is at 532. You see right here is at 532. And then we can also see that we have a line above at 544, right? So anytime you have a line at key levels that is above the current stock price, that is called your resistance level, right? The way that you draw a resistance line is that you want to find a place where the stock has bounced or touched and rejected 3 or more times. So if you look at this line here that we placed at 544, you can see that the stock was going up, hit that line. We got a red candle, green candle as a bounce, red candle back down. So anytime you see the red and green candles trade in places and sticking to that same price level, you can see in this area, we have a cluster actually happening here. That's more than 3 touches in this area. And then we even have some more in this area here. So this is why I would place my line right here. This is going to give us resistance. And again, resistance is going to be, think about it as a ceiling for the stock. So for instance, let's say, I don't know, tomorrow the SPY end up, popping back to the upside. One level we could pay attention to is 544. Not saying that that's the only one, because we could actually be looking at about 540 potentially, but 544 is a definite guaranteed level. You can see again based on how many times it rejected and tested, and then you can also look at this level and that level. That's why we have those lines there. Now, again, that's if the levels are above a certain stock price. Now, if we have a line or a level that's below the stock price, that's going to be your support, right? So you can see that this blue line here is at 532.10, which is technically below 532.90. That's going to be your support. That's going to act as the floor. So resistance is the ceiling, support is the floor. So once you have your floor and your ceiling set, you now have a nice trading range to where you can see, okay, the stock is not just going to skyrocket from 0 to a million, and it's also not going to go from a million straight back down to 0. It has, some points to check in at, right? So looking at it from this perspective, we can see that we have support here at 532. Give me 1 second. Okay, Mark's power just went out. I think it's storming on his side of town. That's fine. I can take care of everything until he makes it back. But yeah,
Can you post link to the Discord?
Yeah, I got you. Give me 1 second. Mark should have posted it. Let me see. Yeah, the link is in the, give me 1 second. Copy it and paste it. Here you go. And let me make sure, well, actually, give me 1 second. I'm gonna make sure that's the right link. So I'll check it in a second.
I don't see any link. It didn't show up in the chat.
Okay, yeah, it's probably because you disconnected and came back. So give me a second. I'll get it in there for you. All right. Back to it. So again, support is going to be the level below the current stock price. Resistance is the level above, and that's how you find your trading ranges. And again, 3 or more touches is all you need. You can look here in this area. We have 3 or more touches happening on both sides, to the upside and downside, to where we have this nice trading range to where the SPY was consolidating before it broke out, and it even tested here a few times before breaking out to the upside for a really nice run from 530 to about 544. All right, let's keep it moving. Next thing, MA ribbon. So the MA ribbon stands for moving average ribbon. This is the way that I have it set up for my swing trades. Really simple setup. I have 20, 50, 100, 200. So 20, 50, 100, and 200 are my moving averages. You don't have to use these numbers. Again, this is just what I prefer to use. I know some people like to use a 21, 13, 8, different combinations. But for me, when it comes to swing trading, I like 20, 50, 100, 200. And if 4 lines is just too much to look at, you can take it down to 2. And I recommend a 20 and a 50, especially if you're swing trading and you're looking at the 4-hour, 1 day and 1 week time frames. But when looking at these, what I like to do is just make sure I know which excuse me, got more people joining. I like to see which moving average is above what to know where we have these different levels to where the stock is going to check in at, right? So the moving averages can also act as support or resistance levels. You can see that when we look at the 20 here, you can see that we had a few candles. Let me zoom in. We had a few candles that bounced here. So we had the stock at 564, came down on 3 red candles, bounced off of this resistance line here, this blue line, went right back above the 20 MA and then came back below. So it checked in at the moving average, and then it went to the next moving average where it did the same thing. Really large red candle, boom, bounce for a check-in. It tried to break again, came back up, tried to break one more time, and then it actually broke through. This is what, Friday. So yeah, pretty bad last 2 weeks for the SPY, but this is a good opportunity for people that have been looking to get into some names that's related to the SPY, and if you're trying to get into the SPY itself, if you haven't already. But again, looking at the moving averages, the way they're set up, we're going to start to see some things change. So right now, again, this is fine. You can look at the 20, 50, 100, 200 for your key levels that will help you identify where it could bounce at in between your support and resistance. And now that we've broken below this 50, and this is another thing. The more time that's added into the moving average, the tougher the line is going to be, right? So for instance, the 20 MA, it's only 20 days added into it. So you can test one time and just break through. Excuse me, and just break through. The 50 MA, you're going to have to sit and test that one a little bit more than the 20 because there's more data added into that line. It's a heavier line. And now when you get to the 100, again, same thing. It's twice as much data in it as the 50. So it's going to be a tougher line to break. And then when you get to the 200, we pretty much call it the guaranteed bounce. If we make it all the way down to the 200, which I don't think that's going to happen, but if we were to make it down to the 200, the first touch on the 200 is pretty much a guaranteed bounce. So if any stocks that you're looking at, and you look at them on the daily and they're close to testing that 200 MA and they haven't tested it once, that first test is normally a bounce. And when I say a bounce, I don't mean like a bounce back up to a key level, but I mean as soon as it touches, you can get a nice size green candle and potentially a start for continuation if you check your other moving averages. All right. Let me reset my chart. All right. Another thing that we're going to start to see here is that with these moving averages, as we move through to the bottom, we're going to start to curl this 20 MA to the downside. So this 20 MA, once it crosses underneath the 50, now they're out of order, because normally when you have the 20, 50, 100, and 200 stacked in this order, in chronological order, that 20 is very hard to break, and that 20 is going to act as a diagonal support. You can see back here in the past where we have 20, 50, 20, 50, 100, 200 stacked in this order. We're just testing and bouncing the whole way up. We broke through. That 20 actually crossed that 50 after we broke through that 50 and tested the 100, and then it crossed back up once we made our recovery to the upside. So what we're looking at here, we could see the 20 cross below and go under the 50. But then again, I still think that even if we do cross below the 50, I think that we'll get another maneuver like this to where it crosses back up and we run to the upside. So now, is it going to be this small of a curve? I'm not sure. If I knew, I would tell you. But again, just knowing how the moving averages work, just pay attention to the key levels on your moving averages to see, okay, where are we going next? So Friday, we tested 528, which is the top of the 100 MA, and we bounced off that to come back above this support level at about 532.10 to lock in at 532.90, which was pretty interesting. But yeah, that's the moving averages in the MA ribbon. Again, if you're looking at 4, it's too much. You can just knock it down to 2. Make it real simple. This is what I started with. Just 2 moving averages. I actually started with the 50 and 200, which is way too slow for me now, but it may be a little bit better for anyone that's like brand new to trading. But I recommend 20 and 50 even still versus the 50 and 200 setup that I had. Pretty bad. All right. Next thing, VRVP. So the VRVP, and let me open my data window. The VRVP is this tool on the right-hand side of the chart in the blue and yellow. So this stands for visible range volume profile. So the visible range volume profile is going to be the tool that tells you the buy and sell volume at key levels, right? So what I mean by that is every bar that we have that's in the blue and yellow, they're called nodes, right? And each node has some information as you move back and forth between the nodes. The nodes have information on how many buys and sells are pretty much there. So it's showing you buy and sell volume. So if you want to know, is there a lot of sales or buys waiting at key levels, the VRVP is the tool to tell you that. So looking at this node that we're on here, if we look at the VRVP, we can see that the up, which is short for up volume or buying volume, this is how many people want to buy, is at 45 million. The down volume is at 31, right? So this means that at this level, this is way more buyers here than sellers. So people are waiting to buy here. So we can also see that once this candle, and it's going to adjust for a second, once this candle came down into this level where we had a lot of buyers, it got bought up, right? So it came in, boom, it hit that moving average at about 528, and people were just waiting to snag up some shares. They bought it back up, and then it locked in above our support line here. And then so as you adjust your screen, because this is the visible range volume profile, it's going to take in more or less data depending on how many candles you have from left to right. So it's going to read from this candle to that candle. And the more candles that you have, the more information it can give on where the buys and sells are going to be located. That's why it's called the visible range volume profile, because it's what's visible. So if I bring it in like this, give it a second, it's going to adjust. Right. And then again, the only thing you need to do if you want to know where are the buys and sells, just hover over the nodes. You can see here, okay, we got 45 versus 31. Here we have 57 versus 80. So anytime you see something like this is pretty much telling us that if we go on this node, if we hit this node down in the 520s, we could be brought down to about 517, right? So the node above it, there's a lot of buys waiting there first. So if we stay here and we collect all of these buys, then we could be moving back up to fill this little gap back up to the 540s before we even decide to test this level below. And that's what I think is going to happen. I think, again, we may see some red at the beginning of the market tomorrow, but I think with all of the selling, I think investors and traders are just waiting to buy it up. There's been a lot of news cycling around. Warren Buffett sold half of Apple. He's been selling Bank of America. And I think that now people are saying, okay, we've been down for 2.5 weeks. Let me start to accumulate here, because I think this is a nice level. Even if it decides to go a little bit lower, this is still a nice level to start to average in and buy it. And then again, we can see that displayed on the VRVP with the data. So again, it's a little of a curve when using this, but it's an extremely helpful tool if you're looking for levels to where, okay, you want to know where the buys, where the sells, and where should you buy and where should you sell. All right, cool. Let's keep moving. Yvonne, you got a question?
Yeah, Ladarius, thank you for that. On the side where you have your data window where it says the SPY MX, where it's got the open, high, low, and close, how should we be using that information when we're putting in trades, the open, high, low, and close of the previous days?
Yeah, so the open, high, low, and close. This is just, I'm thinking that this is the candle data, right? This is, let me see. Yep, give me 1 second. Let me zoom in, because I don't use that in my considerations, but let me tell you what it is. So it opened here at what, 535. So this is just reading this candle right here. This information is just giving you the information on the most recent candle. This is open. The high is 536.99. So that's what it is. Let me zoom in some more. So that wick that it made to the upside, yeah, at about 536.99, that's the high. So yeah, it's just giving you the information on this candle. The low is at 528, and then where it closed at is 532.90. So this is just giving you the information on the candle. I don't, and when I'm looking at a swing trade, I don't use that information. I don't use the open, high, low, or close just for one candle in consideration. But I think this is just a display window telling you what's happening for that one candle. I would need more information. Like if this could, I don't know, give me the information for 5 candles, 10 candles. I think it would be more useful for the way that I'm trading, but just giving the data for one candle, I don't know if I would necessarily use that in the way that I trade.
Oh yeah, I didn't know it was just one candle. I was just thinking it was for like, you know, the whole day.
Yeah, it is for the day. Yeah, this is the daily. Each candle represents one day, and this is the open of the day, high of the day, low of the day, close of the day, change, volume of the day, all for this one candle.
Okay. Got it.
Great question. Thank you. Let me see. We have some questions in the chat. Yeah, Northlake, again, when I get a second, Mark, he normally posts the link for us, but he's texting me now telling me that there's a power outage. So I'll get you that link when I get a moment. Cool. All right, cool. All right. Keep it rolling. Next thing, the MACD. This is really simple. The MACD stands for moving average convergence divergence, and it's really just a relationship between these two lines. The two lines represent buying pressure and selling pressure. So the pressure to buy the stock, the pressure to sell the stock. And the easiest way to read this is just figuring out what line is dominant, which one is on top. So if the red line is on top of the blue line, easy enough, that means that the selling pressure is being applied to the stock. So now, again, we just talked about it. The SPY has been down for about 2 weeks. And we can see that, of course, the MACD is showing us that the red line is on top. So the pressure to sell is being applied to the stock, right? Now, anytime you see the blue line on top, that means that the buying pressure is being applied to the stock and that the stock is going to want to go up. So if we look back in this area where we have the blue line on top, this is where buying pressure is being applied. And then this area where the blue line is on top, again, another area where the buying pressure is being applied. And if you have a hard time looking at these lines, like this is too much, just check the histogram. This histogram is displaying the same data. It actually adds a little bit more to it when it starts to change to the other side. So when you're looking at the histogram, of course, if it's red, that's representing that we're going more to the sell side. So that means that the selling pressure is being applied more when we see this red, right? When we see this dark red, that means that it's increasing in intensity. So that's even more selling pressure happening here, right? And then when we see the powder, it's like powder, I guess, pink color, that means that we're looking at the intensity decreasing. So it's getting closer and closer to switching to the other side. But we can see on Friday, we just had a blowout. We had some accumulation here, and then we had it getting weaker and weaker and weaker. We thought maybe we could see some green, but nope, Friday, we just had a complete flood back to a dark red level that took us back to the sell side. And then when you're looking at green, same thing applies, right? Dark green increasing in intensity as far as buying pressure. And then that light green means that, and you can see it's getting weaker and weaker and weaker. And then boom, we switch over to selling pressure and crosses back over to buying pressure. So that's the easiest way to use the MACD. Again, you're going to use this to pretty much confirm the trend. If you have a question of what's the trend for the stock, right? You can't look at, let's say you can't tell by looking at the candles. You can't tell by looking at any of the other indicators, excuse me. Check the MACD. The MACD is your trend indicator, and it can help you identify if the buying pressure or selling pressure is being applied. Now, one special thing about the MACD is that when you have a MACD crossover, that means that you're going to get a nice size candle to either side to start the trend, right? So again, if this is a trend indicator, the indicator is telling you that we're either trending down or we're trending up. So if we're trending down, to start going back up in the up direction, we're going to get a nice size green candle, right? Because it has to start the uptrend and break us out of the downtrend. So what we're going to be waiting to see eventually is that this blue line is going to start to bend and curve. This red line is going to continue to come straight down. The blue lines are going to start to curve and cross over. So once you have these two lines touching, you're going to have what we call a MACD crossover. And the MACD crossover is going to do just that. It's going to confirm the trend has changed. And then you're going to see a nice size candle. I'm not saying that you're going to see a 10% candle on the day, but you're going to see a nice size candle to get the trend started in the opposite direction. And the same thing happens if these lines were reversed to where you got the buying pressure on top, it crosses over underneath the selling pressure. So now the selling pressure is dominant. You're going to get a nice size red candle to start the downtrend. But yeah, so that is the MACD. Any questions? Cool. All right, last thing. The stochastics. This is the stock RSI, short for stochastics RSI. Works similarly to the normal RSI. The only thing about this one is that instead of going from 30 at the bottom to 70 at the top, this one goes from 20 to 80, and it loves to frequent 0 and 100. And what I mean by that is if I scrunch it up, you can see how many times it hit 100, how many times it hits 0. So think about this indicator as basically a loaded coil spring to show you the momentum to either side. So what I mean by that is if we had the stochastics low and the stock is pulling back, when it decides to go up, this shows us how much momentum we can have moving to the upside. So right now we're in a downtrend, right? In a downtrend, we're pulling back. But if we got a nice size or a nice pop on the day, a nice percentage on the day, we have a long way to go up before we get to 100. So eventually, once we get out of this downtrend, we have a lot of space and opportunity to the upside when it comes to looking at these stochastics. Again, just think about it as a loaded spring. The lower, the better. Once it resets down to 0 and it pops back up to 100, you can just ride the wave up. So again, think about it as a momentum indicator. And what it likes to do after 0, it checks in at 20, 50, 80, 100. Those are the levels that it likes to check in at. So right now you can see that we're at 0. Sorry about that. We're at 0. Went up to 20, and you can see right now it's kind of hanging around 20. And if it stays and locks above 20, the next level we're going to be targeting is 50. After that, 80. Next, 100. And the thing about this one is that this is going to move way faster than your normal RSI. That's the thing about this one. This is way more sensitive. Again, if you look at the normal RSI, you're not going to see any wave patterns or fluctuations like this on the normal RSI. But on the stochastic, since it's more sensitive, you're going to be seeing that. And again, it's just pretty much telling you how much energy is in the next move, right? So if we're looking at the SPY continuing to the downside, right now it's at 18. And let's say if it was to go back down to 0, right? 18 to 0 is a decent sized move. But if it goes back down to 0, that means that we're fully loaded. And if we go back up to 100, we have 0 to 100 to go ahead and take over and make that move to the upside. So that's how I like to use this stochastics. If you're new to it and you're like, I have way too many indicators already, you can skip these stochastics. Again, I call it a secondary indicator. You don't necessarily need it, but it's good to have just as a check of reference to see, okay, where am I and how much punch is this next move that I'm looking at actually going to have? Let's see, I have a question in the chat. How can we look at these stochastics RSI to get in like in late April? Late April, what is this? Back here, where it floored. Let me see. You're asking about this, right? So this is a touch. Yeah, this is a touch back on 0, and then it just shot up. Yeah, this is a straight pull all the way up to like 70, from 0 to 70. Again, the stochastics can move. When are we going to get an opportunity like this? I don't think that this was solely off the stochastics. I think the conditions are right, market wide, and then also looking at our other indicators when it bottomed here. So we look at this bottom here. We can also look at what was happening on the way up on the stochastics. We can see that we had the MACD trying to cross over in late April. Yep, this is late April. The MACD was trying to cross over. It failed one time, and then the next time it exploded, crossed over right here in late April, beginning of May, and just took off for a crazy run. But again, that crazy run came after a massive downtrend, right? So we're in a massive downtrend again. That's why I say this could be a good time to load up and accumulate, and then take the ride back to the upside. Again, this is still an election year. The SPY is still up on the year, and I don't think that we're done. Yeah, I know a lot of people are like, it's over, take it, sell everything, and and run. But normally in times like this is where you should start to buy. I'm not going to say refinance your home and put the loan on it, but this is a good time to definitely start to get some averages down, find some stocks that were too expensive before, and to balance out your portfolio. But good question in the chat, Ross. All right, cool. Any questions on anything that we've went over so far? And let me see. Let me check my phone for Mark. Yeah, he said there's still an outage. Sheesh. Okay, let me text him. Okay, cool. So Mark is down for the count. That's fine. Y'all will be stuck with me for today, and should be fine. I can cover what Mark didn't or wouldn't get a chance to. All right, cool. Any questions on indicators? Cool. All right, so I think we have some stocks in the chat. Again, this is the time to where if you have any stocks that you want us to look at, or Mark's not here, you want me to look at, and you want me to chart out and give you my perspective on the levels or where I think it can go, post it in the chat. I see we have Rivian, GLB, and DDY. I think that's GoDaddy. We also have TQQ, CrowdStrike, and Intel. CrowdStrike and Intel has been getting stumped out lately. Cool. All right, I'll give you all a yep. And then we have AMD. Ty, you have a question?
Can we look at Coinbase? And can we look at AMR?
Yeah, can you put it in the chat for me so I can just go down the list? I appreciate that, Ty. All right, so I'm going to give you all a second. Add those in the chat, and I'm going to pull up some charts myself. I have a few things that I'm paying attention to. And let me see, what do we have? AMR coin. Okay, cool. So we have about a good 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, yeah. So we have about 9 in the chat that I'm going to go ahead and break down, and then I can add 2 to that. So we have about 11 stocks that we can look at. Again, if you have any other ones, just add them to the chat and we can take a look. All right. First stock, Rivian. All righty. So we're going to look at Rivian in a few different time frames just to get a perspective on it. I'm thinking you're asking about Rivian because of its earnings, right? And who posted that? Tegan? Is that? Yeah, Tegan. Are you there?
Yeah, not really because of earnings. I was just kind of interested in it. I have some of their stock, so.
Oh, okay, cool. So yeah, their earnings is what, Tuesday? How are you feeling about earnings?
I don't know. I'm kind of 50-50.
Yeah, it's kind of hard to be optimistic right now. I get it. All right, cool. All right, let's take a look chart wise. All right. So looking at the day right off the bat, I'm seeing that it had a nice pop back in June. I'm thinking this pop had to be related to either a deal or Tesla. I know that Tesla has been driving the EV market, and Tesla popping back up and having a decent news cycle on what they have to come has been, like, I guess, stabilizing the EV space. But when I look at the first thing I'm noticing is when I look at the VRVP, we can see that right now we're kind of in a space to where we're stuck at, this looks like support, actually. So support looks to be in this area. Again, the reason why I'm calling this support is because we had a large red candle that touched it. It got bought up. We had a green candle that tried to break, rejected, another green candle that pulled back a little bit. We tested this 200 and pulled back. So in this area, you just have a lot of traffic that's hovering around this price point at about 14, we can call that 1450 just to make it even. Right now, we had a pullback, and you can see that we bounced again. Like I said, that 200, anytime you come in contact, I would say first touch with that 200, you can predict a bounce. And the same thing happened here. First test on the 200, green candle because we bounced. Also, that 200 is right in line with the support that we placed here. What I'm seeing is that if we move to the upside, we need to watch this key level right here, right at the bottom of this VRVP. That's why I love the VRVP. I would watch it right here because we have a lot of sales happening right here. Again, if you're wondering what I'm looking at the VRVP, the up and down. So if you have down, that means sales. If you have up, that means buys, right? So once you get into the 1624 up to 1675 in this area, you have 15 million sales versus 13 million buys, which right now that could be the ceiling for it. So if it pops, it could go for 16. But then let's also check it to the downside. So it would need to get below about 1410 to 1405 to break to the downside. And then it looks like we could be testing around the 1350 area and scrunching the chart up. Man, that's why I like the VRVP. Look at this. We also have some consolidation back here, which I didn't even see that, but the VRVP is telling us that there's a lot of action right here. Oh, turn this off. But the VRVP is telling us that we have a lot of action right here. So the next level that I will watch for, if it's going to close this gap that it just recently created, the floor would be right here at about 11.95 to 12 bucks. Let me zoom back in. And that coincides with the 100 MA. So that 100 MA on the daily is what I would be watching for. So these are the levels. We have a recent support at about 1440. We have a high, again, we can see the buys and sells at about 16. You can call that 1625 to 1675 for the top side of that node. And then to the bottom side, we can look at about, we can call that $12. This is 11.92, but 12 bucks just to make it an even number is what I would be watching for. Also, we have earnings Tuesday. So that again, to me, earnings is a coin toss. It can either say it can be a bad earnings and send it up. It can be a good earnings and send it down. But these are the levels that I'm seeing. And we can check a different time frame. Do you have any questions for me so far, Tegan?
Nope, none so far.
Cool. All right. So the RSI is pretty low at 44. Again, it's just being brought down with the rest of the market. Stochastics is on the ground. And it looks like it's trying to recover a little bit. So it just came off of 0, it's sitting at 2. Still not enough. We want it to be, at least bouncing back up to 20. If we look at that MACD, crossed over to the downside, like everything else we may look at due to a market-wide sell-off. Let's look at the 4-hour. Take this extended trading hours off. All right, 4-hour. Pretty much same thing. Yep, 4-hour, same thing. Again, I would be careful of this gap to the downside. Pretty much after 1330, we could go into free fall if we don't bounce. And again, 1360 to 1330 is this area right here, this zone that I'll watch. And if it breaks, then we could be heading back down. And the reason why I'm saying that is look at the VRVP. Almost nothing is in this area as far as buys and sells, right? I can move my mouse out the way. You can see how this volume is just eroded right under that 14 level. So I'll just be careful if it gets down that far. And again, with earnings, who knows? Earnings could send it up or down depending on the print. And then let's look at the 1 week, and then we can move on to the next one. All right. Ooh, this has been consolidating for a while, which is not bad. It hasn't went lower, right? It's just literally, it was at one point, ooh, it was in the 100s. And just bounced its way down. And yeah, it's been sitting here. Sheesh. Yeah, it's been sitting here since December of 22. So consolidation is happening. And again, we will probably need a few quarters of nice earnings, and then we could bounce back up to right here. This level is where I would see the roof at. And again, this is looking at the weekly. So give it, if you're giving it some time, and actually, again, the earnings are well. So you get 2 or 3 quarters worth of great earnings. We could see it back at 40. And the reason why I'm saying that is we look here, we can see that we tested 40, 1, 2, 3, 4 times before it went back down into the it broke lower into the $14, $15 range. So that's what I'm seeing for Risen. Any questions?
No, that all sounds good. Makes sense.
All right, cool. What's the next stock? GLBE. I don't think I'm familiar with this one. GLBE. Yeah, I've never heard of this one. Huh. Okay. GLBE. This is GLBE Online. Is this our global E Online? Is this e-commerce? What sector is this?
Yeah, it's e-commerce.
Gotcha. Kind of figured that. Okay, cool. So this is moving with what? Amazon and things of that nature?
A bit.
E-commerce.
Yeah, I mean, kind of. They do more like international, like shipping and sales kind of stuff. So I mean,
Gotcha.
I haven't really looked into how much it's related to how Amazon moves.
Okay, business wise. Okay, that's cool. All right. So looking at it here again is being brought down with the rest of the market. This could be forming an inverted head and shoulders. So an inverted head and shoulders is one of the most successful patterns, and an inverted head and shoulders is actually a bullish pattern. Let me bring up the quick Investopedia explanation if you really want to get into it. Let me see Investopedia. Sorry, I'm on my other screen here. 1 second. Boom. All right, let me drag it over. All right. This pattern here. So head, shoulder, shoulder, breakout to the upside. So it's a pretty complex pattern that takes a second to build. And if you look here, you can see we have a shoulder in this area. We have a head. And then we have a shoulder as well. Right. So this could be the shoulder. Again, the shoulder, it's not going to be a picture perfect shoulder. Like this shoulder is ugly. It's not as pretty as this one. But the only thing you need the shoulder to be, and they may not be the same size. One may be shorter than the other, but you just don't need the shoulder to break or become the same level as the head or the pattern is broken. So when we look at it here, we can actually place our line. We can place our blue line there, and you can see back here, we tested to create the shoulder, and it starts here. Started at 41, came all the way down and bounced at 31, going back up to 37. So it created a shoulder here, came down for the head at this level at 28, went back up to that 37 again. So it came up to 37 twice, 37 in this area, 37 in that area, tested 31 to the downside, and it looks like it tested 31 to the downside again in this area. So again, what we're looking for is shoulder 1, shoulder 2, head, and then it's going to break out on that right hand side to the upside. So that's what we're paying attention to. Now, this could pull down as low as 30, and we can actually see the wick actually hit that level because the VRVP is telling us that there's a little bit more action happening here, but it got bought up. What I would pay attention to is if we can make it back up to 33. If we can bounce and make it back up to 33, let me see, you also have earnings, in about a week. So yeah, I will watch earnings. If earnings send this back up to 33, anywhere between 33 to 34, then we could be going right back up to 37. And if we go back to 37, be prepared to take this back up to 40, potentially 41, 42. Because what you need for inverted head and shoulders is a break at the neckline, right? So the breakout is right here, and that's right at the neckline. The neckline is going to be a main point of resistance to where we have a lot of touches that created that shoulder, that head, and then that second shoulder, right? So if you look here, I can actually put, well, you can see this red line here. This is the POC for the VRVP, and that's the point of control to where you have the most volume for the candles that we're looking at. But I'm going to go ahead and put my blue line there. But you can see that this line right here, so at 36 to 37 is the price to beat. If it breaks 36 to 37, then again, we could be going back up to 40, potentially 41. And if we scrunch it up some more, yeah, if we scrunch it up some more, we can see that this level right here at about 41, 42 is another high point to beat. If we break that, then we could be going back and testing. It looks like 52-week highs around 44 to potentially 45, 46. Any questions?
So we just don't want this shoulder to get below where the head got down.
Yep. If it drops to, what is that head? 28. Yeah, it's going to blow the pattern. So right now it's holding. This is a point. If it consolidates on like 30 to 31, you're good. If it blows down into the 20s, then you may want to be careful, because then it's blowing that side of the head and shoulders out. But if it pops back up and it starts to consolidate in the upper, the lower to mid 30s, then you should be good to go. But I'll also watch earnings, because again, that's the wild card here. Without earnings, I would lean on the pattern more, but now that you have earnings coming up, I would watch it.
All right, cool.
All right, next stock, GDD. I think is that GoDaddy. Yep.
Yeah, it's GoDaddy. This one's a little different than those other two ones, so I'm just curious.
Yeah, this one has been sneakily running up while everybody's paying attention to semiconductors. Nice. Let me check everything else. I'm pretty sure this one is hot. Oh, this is actually okay. So they just had earnings. It looks like they beat on revenue and it had a slight miss on earnings, which it looks like it didn't do anything to the stock. Let me see. It actually pulled it down from 145 to 141. So it had a $4 pull down, and it popped right back up on the day that the market was bleeding up to 151. That's crazy. Yeah, it had a 7% pop to the upside on the day that the market was bleeding. Did they have any news?
A little surprised on that one when everything else was red.
Yeah. It looks like they were maintaining a buy by benchmark. Let me see here. Oh, okay. Yeah, they got price target upgrade to 170 from 158. So it looks like analysts are believing that this can continue its run. And yep, it had another price target upgrade. So yeah, it looks like this can get it to the 170s based on what the analysts are seeing, pretty much off of earnings. So yeah, earnings came out. Analysts had to reevaluate and readjust price targets and said that it's going to move to the upside. So right now, I'd be a little careful. The RSI is hot. It is at 65. You still have space to take it up to 70. And it looks like this could over rev. It looks like it has over rev plenty of times. 1, 2, 3, 4, 5. Yeah, about 7 times is over rev. Back here, I don't know what happened back here, but massive explosion up to a 90 on the RSI, which is crazy. But then it sold all the way off to 44. So right now, and we can look at it on a 4-hour. Right now, what I would do is watch this level right here to the downside. Watch that 145. It seems to be hot. It seems that when we were coming up, we were bouncing off of the 20. Again, we're in that formation that I talked about earlier, where you got the 20, 50, 100, and 200 from least to greatest in chronological order. And you can see how it's just using that 20 as a bounce point all the way up. It's not really even touching the rest of the moving averages. But I will watch 145. I'll also watch this level here at 140. And I mean, it also is, you can see it's coinciding with that VRBP. And then you can also watch 148 if you want to be a little granular. So 148, 145, and 140 is what I'll watch to the downside. To the upside, I can't really say. This is like all-time highs. It is astronomically high. So when you have all-time highs, what I normally do with all-time highs is go for psychological levels. Psychological levels are 5, 10s, 15s, 20s, so on and so forth, right? So if it's at 151, the next psychological level would be 155, 160, 165, 170 is what I'll be paying attention to, because we don't have any context to go off of history-wise on the chart. But no, I'm going to be paying attention to this one myself, especially since it popped up on a day where everything else is red. This is interesting, just off of price target upgrades. And then it went down on the day that it printed earnings. So definitely going to be watching GoDaddy a little bit more closely. Let's check it on the 4-hour to see if we see anything different. Nope, just a better picture of the levels that I've drawn. You can there could be a level at 143 as well. So it has a lot of reinforcement before it gets down to 140. So between 150 and 140, a lot of levels for it to bounce at before it actually gets down to 140, which is actually good, because this means that when you see something like this, it's just like what happened here. Stock was running off of 120, boom, hit up to the 130, 140 area, straight consolidation, just building momentum and energy, and then popped out to the upside, went to the next level. Now it's chopping around, building up momentum and energy, had a pretty decent earnings and received price target upgrades, popping back to the upside. So it looks like this run is probably going to continue. And again, I will watch psychological levels of, 155, 160, so on and so forth, because we don't have anything to go off of. Yeah, so I would just be careful with that. And again, if you see any nice pullbacks, you could go ahead and grab on the dip, depending on how you feel, or I'm gonna leave that up to you. But no, stock has been doing amazing, actually. Any questions for me?
No, thank you.
Cool. All right, next stock. What do I have on my list? So that's the 3 at the top. We were looking at TQQ or TQs. All right, this one. How much data do I want? I think that's fine. That's enough data here. Okay. All right. So looking at the Qs, the TQs, it looks like we're consolidating at this level right here. What is that? 58. Or we were consolidating at that level, and then we have another point of consolidation right on the POC. Again, you're going to hear me refer to the POC a lot. The POC is the point of control. And when you're using the VRVP, it's going to print this red line for you. The red line is the area that has the most volume. That's all. That's the only thing that the POC is. And the most volume means that you're probably going to have a lot of stagnation there. You can see on this big node for the VRVP, we look out to the left, there's a lot of chop. Just a lot of built up chop before it drops and goes to it for another run. So what we're seeing here is that it hung around at 63 for a while, and we kind of knew that was going to happen by looking back into this area, and then we can see that was the previous support before breaking lower. Now it's sitting right at POC at about 59. Let me check so yeah, RSI is pretty low at 33. So with this one, I would be looking at going long. I would not be looking at any really short trades. How many buys and sells do we have here? We got about 149. So it's more buys than sells in this area. Again, looking at the VRVP, we can see 149 for buys, and we can also see 132 for sales. Someone had a Ty, you have a question?
Yeah, what is TQQQ?
Just a version of the Qs.
Okay.
Yeah, the Qs, they you can look at SQQQ. They have a whole bunch of different versions. It's just like how the SPY or the S&P 500 have different tickers that's related to it in different ways that perform in different manners, or the portfolio may be balanced. Like, if you're looking at you're looking at one version of the SPY could have more Microsoft than Nvidia, or one may have more Apple, so on and so forth. So they're all similar in the names, but then they also function differently based on how the portfolio is actually set up. But yeah, that's pretty much the only difference. Like if you look at the SQQQ or the SQs, that one is actually an inverse of the Qs. So you can play it down, which we'll look at that a little bit later. But yeah, so this one is hitting right in POC level. So it's a lot of action. It looks like this is not just going to be a touch and go. We may sit here for a second, and we actually may bounce back to the upside, and we may see about 62. What are we at now? 58. So yeah, give or take, we could be bouncing back up about $4 or $5 to the upside, but it looks like we may have some chop. And again, we're looking at we got really close to that first touch on that 200. Again, that 200 first touch. Let me zoom in. 200 first touch pretty much is a bought up level, right? So we can see that this candle actually reached the 200, and what happened? As soon as it touched it, it's like that level was hot. They bought it up immediately. Boom. Bought it up from, it got as low as 56, bought it back up to about 58, almost 59 as soon as it tested that 200-day moving average. So looks like we may have some consolidation here, and I would just watch it moving forward. Also, we talked about an inverted head and shoulders, right? Shoulder, head, shoulder for a breakout to the upside, which makes this is bullish. This means that the stock is going to go up. We actually are just coming out of a head and shoulders, which is the opposite. Just flip the head and shoulders, the inverted head and shoulders upside down. We have shoulder 1 here, a head there, shoulder 2 here. And normally with head and shoulders, again, it has to come back to the neckline. So that neckline was actually right here. This is where the pattern started. Started here at about 63, 64, went up, shoulder, head, shoulder, back down for a rest. So yeah, we could be bouncing around this area for a second. That's what I'm seeing so far on the daily. Let me check the weekly. This looks even better. Okay, so yep, same level. A lot of, you can even see right here on the weekly VRVP, a lot of intensity. If we go lower, then yeah, if we get down, if we stay locked into this level, then we could be pushed down to about 54. And then at 54, we could be getting bought right back up to the upside. And if it drops below 54, we could be going down to 47, which honestly, I don't think that's going to happen. I think that we're going to sit and probably consolidate in this area for a second before we decide to make our move to either side. So I think consolidation is what's going to happen here. Any questions? Who put this one in the chat? That was Ross. Okay, cool. All right, crowd. I remember when this drop first happened, everybody asked me, should you buy it? No, do not buy. So rule of thumb for me is when a stock plummets, I do not touch it for a minute. Like, and when I mean a minute, if I'm watching it on the day, I won't touch it for at least like a week or two, just to pay attention. When it's time to trade, I like to let it, let me reset this chart. I like to let it consolidate. First, I like to buy on consolidation, right? Whether it's below key levels or moving higher, I like to pay attention to consolidation more. Now that we're all the way down here at 217, sheesh, this used to be almost a $400 stock. It's definitely on sale. They have earnings end of August. This is going to be a very, very interesting earnings. If they could save the day, or they could make this go lower. So the earnings is going to be a crapshoot, straight gamble, because if the CEO can come in and say, hey, we know what happened, but this is what we're going to do moving forward to stop this from happening, or, you know, pretty much plug up the hole in the boat. If they can save the ship, then this is going to shoot back up. And if it shoots back up, the levels that I would be looking at is about 275 first. And then after that, it'll probably struggle to get back into like the lower 300s, 300 to about 315 first. And you can see why I'm saying that, because we pop back up, we get to this level at about 260, we're going to struggle a little bit. But then if it can conquer the 260 to 275 area, which we may sit for a second, we have a gap in volume right here that can take us up to about 295, 296, which will put us right back above that 200. And then we're going to struggle into the 300s. Again, it depends on what the CEO says, because this is a crazy story that's going along with this stock. Now, another thing that I like to tell people is that sometimes when we're looking at stocks, we don't zoom out far enough, right? If you're looking at the 4 hour, or you're looking at the 1 hour, and you're trying to make a decision on the stock you're going to be holding for 3 months, there's too many candles to pay attention to. So we're looking at the 1 day, we can kind of get a picture of, okay, where the key levels are. And then if we look at the 1 week, we get an even better picture of, okay, we can see what history is telling us. So history is telling us that pretty much on this level that we're at, we've been here before, and this is a level of consolidation, right? Now, if we go lower, we could go down to 200 even, and I'll put my line there, my support line here at about 200 even. And my worst case scenario for this stock, honestly, is 175 right here. So I got 175 worst case scenario. The nearest bottom I got is 200. But right now it looks like the 215 to 220 area is a place that we can chill at for a second. We can even potentially see it move back up to 225 to 250. But right now, this is in a complete downswing. And also, while being in the downswing, the market is, the pullback of the market, the correction of the market is piling on top of this one as well. So if you want to go long on the stock, and when I say long, I mean you got to give this one some time. Again, if I'm going long on CrowdStrike, I don't own any CrowdStrike, but if I'm going long on CrowdStrike, honestly, I'm waiting until after earnings to add more. And if I already own it, I'm still waiting to after earnings to see what happens, because if it pops up after earnings, I have a feeling it's going to be running back up, because a lot of people are going to say, oh, they're writing a comeback story, and a lot of investors want to buy back in at that point, because people are just waiting to buy this name because it's down pretty much 50%. But yeah, CrowdStrike, interesting one. I would just let it do what it's going to do. And then once we get into earnings, then, if you want to load the boat there, that would be my idea. But right now, it looks like it's in a downtrend. And again, the levels I have to the downside, 200. Worst case scenario for me is 175. This could go back to 250 right here. And, with an amazing surprise, this would go to 275 right here. That's what I got for it. Let me see. Any questions, Ross, on CrowdStrike? I know this one was yours. Cool. Another thing going long, the RSI is pretty low. Again, a 30 RSI, you can buy this and hold it for a few years and wait for it to recover. You just want to find a nice bottom to get at. But I like to tell people too is that you're probably not going to identify the exact bottom to a penny, right? So I think that buying and just holding and not just trying to say, okay, well, I'm not going to buy today because it's $5 away from the bottom or $2 away from the bottom. I think that if you're going to buy and you plan on holding this for years, 2 years, then you could see it recover. Again, it depends on what the CEO says in the earnings coming up on the end of August. Cool. All right. Next one. Chart and marathon. All right, Intel. I think this one got smacked as well. Yep. Ooh. Yeah, that's ugly. Sheesh. 26%. Yeah, I honestly, when Apple, so before you even talk about the chart, when Apple decided to step away from Intel and make chips in-house, I think that was pretty much game for Intel. I know Intel, they have a lot of they have a large footprint in the tech space, but I think that Ross, you said crowd may see similar action like Equifax. Yep, I agree, Ross in the chat. Intel, I've already been saying it. People asked me about Intel before, and I just can't. Yeah, there are better options at better price points for Intel, and Intel has been around the same price point for years. If we look at, this is the weekly. Let's look at the 1 month. If we look at the 1 month, Intel was this same price in May of 2014. All right. This is actually, that's what, June, July. Yeah. So about mid 2014, 2015, it's been the same price. Like, I mean, okay. It went up to the 50s in 2020. That's COVID. This is all COVID, right? COVID sent the whole market up. So 2020 to 2021, that's the whole COVID boom. It was at a high. And then right after the COVID boom went away, it tanked all the way down to 25. And now it's just been sitting there. So yeah, it's at the same price level that it was at. Sheesh. Yeah, it's actually been at this price point plenty of times, back all the way to like December of '98. So yeah, this one is consolidating heavily. Sheesh. And I heard that they're laying off 15 to 20,000 employees or something crazy like that. Let me see. Okay, I can't find the article here, but I think this happened. They had a major pullback. Like, this had to be from earnings. That's why I don't play earnings. I try not to play earnings. Yeah, this is the earnings drop right here. Geez, earnings, they missed by 80%. Yeah, that'll do it. You missed by 80% margin and you've been in the game as long as Intel, that's never good. And again, you don't have Apple on the books anymore. Apple is doing their own thing with their own chips. So Intel has to find a way to acquire they need to get another sizable company, of the likes of Apple, Microsoft, Meta, somebody. But a lot of those companies are already going in-house or working with other tech companies. So they're leaving Intel in the dust. So yeah, Intel, what is it that this one is a hard one to read because it's so far down. Let me go back to the price. Is that 21? I mean, the best case scenario I got for it is back at 30. But I don't know how long it's going to take to get there because Intel moves so slow. And I think this earnings spooked a lot of investors. Again, an 80% miss. This company what could save this company is one, it either gets another Apple, quote unquote, on its books, or two, it get bought out by another company, right? If some bigger company finds Intel's technology and data and chips useful, they could go ahead and buy Intel because now, I mean, it's going for a discount. I think that could save the stock, but right now I would be careful, especially with that earnings drop with Intel. So again, to the upside, I got 30, but that's a long shot back up. It's down 26%. Moving to the downside, let me look at the 4-hour. Downside, I got what is this? No, it's even lower than that. Sheesh. This is the lowest it has been in wow. Let me see. Oh, okay. So yeah, you can get about 16 to 17 right here. Boom. Right there. You can get 16 to 17, and it is actually sitting on top of, and I'm gonna zoom in and show you all if you can't see it. It's actually sitting on top of this is why you got to back out some, right? We're looking at the weekly, we have to go all the way back. This is in 98, 99, when, well, I mean, market conditions were different 20 years ago or 30 years ago. But it looks like we could have some hope at consolidating at 20. If we go lower, then it looks like 15 could be the floor. Again, looking at the VRVP, and we're looking at buys and sells. Oh yeah, 15K layoff. You lay off 15,000 people. And again, you're Intel. Now, if you're Amazon and you're laying off 15,000 people, you're Apple, you're one of the top dogs. It's kind of different, but Intel has been struggling for a while, and then they announced 15,000 people are leaving the company. Yeah, this company again may be going out the picture, or they could be getting bought out by someone else. I know people are bigger companies are paying attention to this, and I'm probably trying to, eventually going to make an offer to probably buy up Intel because it is a legacy company. But yeah, this is a dangerous one. Any questions on Intel? Cool. AMD, let's keep it going. All right, I get a lot of questions. I know a lot of people in here has some AMD in their portfolio. Let me reset my chart, and let's get a better picture on the daily first. One day. All right, cool. You can tell anytime you want to know if we've been looking at a stock a lot, you'll see a whole bunch of blue lines. So all of these blue lines are telling you that we've been charting a lot of AMD. All right. AMD has been brought down, of course, with the market. They also had earnings to where they barely beat earnings and barely beat on revenue. You can see about 1 to 2% beat on both, which still sent stock still pulled back that day. And right now we're sitting at 132. And I know this is another thing. A lot of people have hope for AMD being the runner-up for NVIDIA. Let me see. Someone had a question. Ty, what's going on, Ty?
Confused with AMD because their price targets are so high. Do you know what I mean? Like, it has always had analyst price targets. I know we need to be careful with them, but they've always been quite high. And like originally the market was really receptive to the earnings and it pushed AMD up, it pushed Nvidia up, and then obviously there's, you know, a continued tech sell-off. But I just find AMD very confusing because I just feel like it should be trading higher, but it just hasn't for a very long time.
Yeah, I think what happened is that, so I think people cycled, or investors and traders cycled out of AMD and just went with Nvidia. I think I mean, do you want a silver medal or gold medal, right? We're talking Olympics. Which medal do you want? You want a gold or silver, right? And I think that people who are holding AMD are like, well, I will get more bang for my buck with Nvidia. Not saying that I've seen a lot of outflows, like major outflows, but that's what I'm thinking. I'm thinking that the consolidation here, especially while Nvidia was still going on a massive run, like this was pulling back. At the beginning of Nvidia's run, it was there, right? We were looking at it at 226. It was that high, but then it went from 226 all the way down to 143 in a span of what, March to May. So in about 2 months, complete pullback. And I think that people are moving their money from AMD into Nvidia. I think simple enough, they're just, Nvidia's eating AMD's lunch pretty much. I think that's what's happening here, because AMD, I mean, from what I've been looking at, they have some respectable technology, especially in the AI space, that could rival Nvidia, but Nvidia is the popular choice. And people like to say that they, made money with the top dog. I made XYZ with Nvidia. Hedge fund managers, portfolio managers, their clients are saying, hey, do we have enough Nvidia? Oh, I have AMD, switch it over to Nvidia, right? And so that's going to definitely take a toll on the stock. And I think that's what's happening here. A lot of this was kind of happening when Tesla had his run. Tesla was having his run, and there was a lot of EV companies that were coming up along with it. And a lot of people are saying, oh, this is going to be the Tesla killer. This is going to be the next Tesla. And really, you only have one. You got one superstar when you have those trendy runs. Like in the EV race, you had Tesla lead the way. And then I think that as far as like pure EV companies, I think Rivian would probably be the next best bet, in my opinion. But Rivian kind of was doing his own thing and doing business in their own way, not trying to copy Tesla or be the Tesla killer. And I think that AMD, people are still looking at AMD as the potential Nvidia killer. And it's like, I don't think that's going to happen. The money is already on the books for Nvidia. And I think that's what's been killing AMD stock. Now, the more earnings that we start to see, so as we go into like Q3, Q4, we start to get into we're going into the other quarters. But actually, I would pay attention to like the Q4 earnings, right? Q4 is going to tell us a lot, because that gives us a better picture of the year to see, okay, this is what they're actually doing with what they have. Because right now everybody's going to Nvidia and giving Nvidia whatever they want. Any deal Nvidia wants, they get at this point. But the low for it, I got your eyes here. I got a close low here, one here, and this is worst case scenario. Worst case scenario, I got a 110 for you, right above POC. So with AMD, again, is not looking pretty right now. Is actually making a bear flag, which is a strong move down, build up consolidation for another strong move down. Also, we don't have we got to carve out a volume right here, but I think we may actually have more people buying. Am I wrong? Nope. More people selling. Yeah. So we have more people buying here. So anywhere between the 121 to 126 level, we have a lot of buyers in this area. And you can see I have support here at about 124. Currently is at 132. And it's falling in this volume gap to where we got up volume at 9 million, down volume at 12, almost 13. So more people are waiting to sell than buy. Once it gets below 130, is at what, 132.50. So best bet for AMD is to stay above 130. If it stays above 130, then we can start to move past this level here, and we will need to top 140 to the upside. If we top 140 to the upside, we can be looking at about 146 to 147 to the upside before we run into any trouble. So you can say 146 to 148 to the upside. To the downside, I'm looking at about, again, it holds above 130, we're good. But to the downside, I'm looking at 124 and 116 you know, if things keep getting worse, 110 worst case scenario with a massive blowout. But I don't think it's just going to go there from 130. I think there's a few things that need to happen before it gets that low, if that even happens. Cool. Any questions? I think that was Ross. Let me check the chat. Yep, that was his last stock. Cool. No questions. All right, next stock. AMR. All right, so AMR has earnings, or it had earnings. When did it have earnings? All right, that's Monday or tomorrow. So earnings tomorrow. Let's talk about levels. So I think Ty, this is yours. We talked about this one before. AMR, I think, is a great stock, especially long term. This stock at one point was in the 400s. You can see it tested 400 a few times. It actually went crazy one time and shot up to 451. It had a crazy day where it went from 407 to 444 in one day. So this stock can move. Right now, the sector is just not hot. So I think this is a good time to buy shares cheap. And again, this is like an alternative energy stock, or alternative energy stock. I think that's the way they categorize themselves. But VRVP wise, we can see that we have a key level right here, and we can even see about 250 being that level. We can see that we have some tests here, some tests there, and then also the level that we're actually sitting on right here is another level to where we can see some added consolidation. So again, everything is pulling back. The market is pulling back. So this stock being extremely volatile, that means that if you see some pullbacks, they could be some nice size pullbacks. But then if you see a pop up, there's going to be some nice pops as well. But again, I think AMR, a lot of people don't know about it, but I think AMR is a great stock to hold long term. And if we zoom out, I can show you what I mean. So if we go to the weekly, and again, zooming out will give you a better picture. If you look at this from the weekly, this looks way better, right? And you can see that the levels that we're dropping down into, massive level of support, right? Back in September of 23, we were touching these key levels before we went on a crazy run. This ran for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, pretty much. 10 out of 11 weeks, it was green to the upside from 217 all the way up to 400. So right now, it looks like it's making a massive bull flag, but we have to see what happens at 250. At 250, if it breaks 250, it could be going a little bit lower here to 229, but I don't think the stock is done. I think that, again, it's just getting started. We can see the stock had a lot of consolidation happening in 2022. And it just hung around, what was that, like 110 to 160? It bounced around 110 to 160 for a while. And then when it was ready to go, after consolidating for a second, went on a crazy run up to 260, came back, and then went on a massive run up to 400. So again, just imagine you would have got this stock at 110 and the stock had peaked at, 100. I mean, at 400. And now it's coming back, is in the upper 200s that can give you another opportunity for a long-term hold. So I think with this one, not a stock that I would day trade, but a stock that I would definitely add due to the accumulation and just wait for a flip back to the upside. I have a feeling that we're going to see 350, 400 again in the next 6 months to a year, which would be an easy flip for the stock, especially if it comes down all the way to about the 250 price point. I think that'll be nice for another 350, 400 test to the upside. Any questions, Ty, on AMR? I know this one was yours.
No.
Cool. Next up, Coinbase. Let me see, what time are we at? 7:37, making good time. All right, Coinbase. This one, I always tell people, Coinbase is a tricky trade, but a great investment. What I mean by that is if you try to play the day-to-day on Coinbase, you're going to get burnt. Coinbase is extremely tricky because it moves with Bitcoin, and Bitcoin is very volatile right now. Bitcoin is normally bouncing anywhere between 60 to 65, sometimes 67K for a while. Just recently, I think it broke below 58. So I think breaking below 58, people are going to be looking to buy Bitcoin at some point. They're just waiting for consolidation. The stock right now is at 204, but if Bitcoin stays where it's at right now, when the market opens, this is probably going to be around the 180 to 170 area, because Bitcoin is down massively over the weekend. Again, it's under, I think it was at like 56 to 57K, just coming off of being at about 67, 68 about a week or two ago. So a $10,000 drop, and the drop is still happening. Also, you have market pressures that are being piled on top of Coinbase, just due to the correction, which could pull it back to 170, 180-ish, which would be a nice area to buy. Also, I think we have earnings at some point. What is this? Did we just? Oh, we already had earnings. Okay, cool. We had earnings last week, and 85% on a miss, and a 3% beat on revenue. So again, with this stock being attached to Bitcoin, it all depends. Like their earnings is pretty much dependent upon Bitcoin and the crypto space. So if crypto is roaring and booming and is doing great, the earnings are going to print nicely. But if not, this stock is going to feel the pain. But I still think that holding this stock long term is smart, because right now we haven't, like the US haven't completely written off crypto. We're just trying to find a way to make the relationship work. But I think that the fact that we're sitting, like the legislators are trying to actually work with the people who are big in crypto space to actually make it feasible. I think that eventually we can see this move to the upside for sure. And at one point, this was at $70. It consolidated in the 70s. What is this? August of 23 to October, November, and then it went from 75 all the way up to like 184. So again, like AMR, this stock can run, but this is just another stock that is harder to trade than it is to invest in. So again, if you have a time horizon of 6 months to a year, buying Coinbase, especially sub $200, is an easy long-term swing. The thing about it is that you just have to be patient. It's just like Bitcoin. It was people, remember a few years ago, Bitcoin was at like 15 to 17K and people thought it was over. And now today, Bitcoin is, even though it pulled back to the 58, 57 area, it was just at 15K and people would try to write it off. So I think crypto, again, is here to stay. We're just trying to figure out how to make it feasible and how to make it work for everyone. But with that being said, I think that Coinbase, as far as publicly traded crypto companies, is going to be one of the pioneers that lead the way. So I'm all for Coinbase, but I'm willing to just pay attention to it for the next year and a half, 2 years. Honestly, I think this is $1,000 stock. Call me crazy. This is recorded. It'll be on YouTube. So later on, once it hits $1,000, I can sing my praises. But do I think it's going to hit $1,000 in a year or two? Probably not. I mean, anything's possible with crypto, but I think that you give it 5 years, this could be $1,000 stock easily. Especially with the fact that in 5 years, I got Bitcoin being 100 to 150K. But yeah, so Coinbase, nice long hold, but
can we see it with some of the other indicators, the RSI, the MACD?
Yeah, yep. So RSI is at, let me reset it for you. Put this back. Yep. So if we look at it, RSI is at 38 on a pullback, and we can see that 38 for the RSI has been a floating level for it. So we could see some accumulation here. Also, it's sitting at a heavy support point. Again, it could be getting bought back up. I would be careful just to pay attention. And then if it drops, again, this is the first test on that 200. So you're pretty much going to get that bounce. Again, I got this for worst case scenario, 180 to the 170s, and you can see at 185, we have that 200 MA to come and save the day. The MACD is crossed over to the downside, of course, because of the earnings, and then again the Bitcoin pullback. And stochastics is at 1 out of 100. So if this decides to go, it take us all the way back up to 100. And again, it's not going to stay down here forever. It was just at 0 here, took us up to 50, pulled back to 35, and took us back up to 100. So any questions for me, Ty?
No, it looks good.
Cool. All right, moving along. We got a firm and Nvidia making great time. All right, let's look at a firm. I actually like a firm as a company, especially with Apple backing off of the firm, backing out of the buy now and pay later space. So let me reset my chart. A firm is consolidated heavy. It slowly slid down from what, 43, which was the former POC, where there's a lot of volume at about 43 to 45, came all the way down to about the 33 area where it hung around, and then is dipping with the rest of the market. And right now is at about $25. Let's zoom out some to get some levels. Let's go to the week. If we zoom out some, we go to the week. Yeah, sitting at 25. It actually loves 25. It looks like if it moves up, the pop side, I said the pop side, the pop to the upside would be back at that 43, 45 level. Let me zoom in, move it over some. And we're testing that 100 MA. So a lot of people may ask, where is the 200? We don't have 200 weeks worth of data for a firm. So a firm just hit the market back here in what, January of 21. So when it comes to a 200-week moving average, we don't have 200 weeks worth of candles. That's why we don't see any 200 MA. We only have the 20, 50, and 100. But right now it's sitting right on top. Zoom in. A firm is sitting right on top of this level right here. It tested. Oh no, it didn't test it actually. It got close enough, but went down into the 23, 24 area, got bought back up. The VRVP is telling us that, yeah, a lot of up volume. Whoa, a lot of up volume right here. 10 million versus 3 million. 3 million down, 10 million up. And then, yeah, we could be seeing it be brought back up. The ceiling right now is at about 28, 29, because then you're going to run into this block of volume to where we consolidated before. Now, to the downside, looks like you got a level right here. So about 22. So 28 to 22 is where it's bouncing around at. Right now, it is at 25. Zoom out some. Yeah, 22 looks nice. Worst case scenario, it could go down to about 19. That's if the market continues to push itself down. Let's check the other indicators. This is the weekly, 38 on the RSI. Again, if it's in the 30s and you want the stock, just be prepared to hold long. And then the MACD, of course, is still crossed to the downside. We could get a tick up to the upside, but not seeing anything with the buying pressure just yet. And stochastics is just pretty much consolidating, just bouncing around between 10 and 20. So this one right now is just pretty much trading sideways and slowly sliding down. You can see it's not a steep drop off. It's just cruising its way down into a consolidation. And I think while cruising down into consolidation, we may see a pop back up. When do they have earnings? Earnings is end of August. Okay, cool. So it's going to be interesting to see what happens with their earnings, because a firm, if you don't know what a firm is, the buy now, pay later company, which a lot of people nowadays use buy now, pay later companies for various things. And with Apple backing out of the buy now, pay later space, I think that a firm could start to get more market share in that space. So if a firm, this is going to be an interesting earnings for a firm. If a firm can take advantage of Apple backing away, because Apple has the brand presence and the money to actually make it work, but for whatever reason they decided not to. We could see a firm, take up more market share and see the stock increase. But that's going to be decided once we listen to earnings. I actually listened to a firm's earnings. I like a firm as a company. I was actually in a firm. Where is it at? Back here. When a firm went on this crazy run back into I actually sold it at about 171, 172. When a firm was doing this back here, we were trading a firm. I think we started I started at 65. Yep, it made a cup and handle. You can't really see it. Man, this is right where I started. I started trading a firm right here. So it made this cup and handle, which is a bullish pattern. I got in at, I think 60 to 65, somewhere in this area, and then just held. And then you can see it's just hopping and skipping up the chart. And then I sold once it got into the 170s. And then it slowly started to peel back off, back to the downside. So crazy run up. This was the COVID. COVID was pushing everything up, but this was the COVID run for it. Will it get back up into the 170s? I don't know. Too far away. We're at about $20 now, but there's potential for it to do great. It just depends on its earnings. And again, if we take advantage of Apple not being in the buy now, pay later space. So Affirm is definitely one to keep your eye on. Let me check it on the weekly, and then we can move to NVIDIA, which is our last one. Ty, you have a question?
Do you think it could go back to the highs of where you sold it before?
Yeah.
Because it's just been kind of, do you know what I mean? Like,
Hold on, let me go to the week. Oh, that's a little ugly. There we go. All right, yep. These are highs right here. Ty, this is what you wanted to see?
I just want to know if you think it could go back there. Because
Right.
it's so far.
Right now, no. I don't see a way for it to get there now. Again, the way that I think Affirm could get there, they would need to continue to take market share from companies like Klarna and all of the other, like Klarna is huge in the buy now, pay later space. I think Klarna had a first to market advantage over Affirm, but I think Affirm, as far as like brand awareness in the US, I think Affirm is a bit more popular, but Klarna, like internationally, worldwide, is just bigger. So if they can start to take more market share, then I could see a way, not back up to like 160, 170 right now, but I could see a way back up to 100 if we can continuously get reports on them taking market share, especially with Apple backing out of the race. Then I think that, yeah, we could be seeing them get up to 70 to 100 to $100. But right now, it is all dependent upon what they say in earnings and what they say about Apple, because Apple recently backed out. I wouldn't say within like the last quarter or two. So yeah, 170 right now I think is unfathomable, but 70 to 100 is a a moon shoot for it. But it could if they're doing the right things with the finances at Affirm. Does that answer your question, Todd?
Yes, thank you.
Oh, no problem. All right, last stock. Boom, 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 boom. NVIDIA. All right, cool. Just making sure I covered all the other ones. All righty. All right, NVIDIA. Where am I at? Weekly? Again, blue lines on Ladarius's chart means that he's charted this stock out a lot. That is crazy. It's almost too many. Let me clean this up. Kind of ridiculous. Geez. Take this one. Give me 1 second. Don't need that. We don't need that one either. All right, this looks a little better. All right, so NVIDIA, talk of the town. All right, so where is this going? If you're in the Discord, you know that I've been talking about NVIDIA pulling back for a second. I just thought that the run that it made out of consolidation was a nice run, but it kind of went up too fast, and now it's trying to find its footing. I think worst case scenario is right here. This blue line, 95, and you can see why. Again, I place my lines based on historical data. If we look at the history of the candles, we can see that 95 was tested quite a few times in this period of consolidation before it broke out to the upside and went on a crazy run up to about 140 before pulling back. So worst case scenario I have is 95 right now. Where are we at? We're at 107. Again, futures come out in 8 minutes. So in 8 minutes, we'll be able to see where the SPY is at. If the market is blood red, that means NVIDIA is going to be blood red. So NVIDIA could be down to between 100 and 95 bucks. I think at $95, honestly, in my opinion, I would start to buy more and more. I would be more lax with buying NVIDIA at 95 versus buying it at about 120, because last week it tested 110 to like 115, almost 120 too many times before pulling back. So I think NVIDIA 95 as the floor would be nice. Now after 95, again, because they do have earnings. And again, if I knew what was going to happen with earnings, I would tell you. I don't know. After earnings, we could see worst case scenario. I'm gonna say worst case and best case scenario, right? So let's say we go into earnings at 95. I think we could see 91. So this level here, 91. Where am I at? 91 to this level here, 85. And if it's a blowout, we can see this right here, 80. So worst case scenario for me, earnings wise, 80. Before earnings, I got 95. Worst case scenario. Now, and also, guess what? This will be the first test on that 200, and it hasn't tested the 200 since January of 23. So yeah, first test on that 200 in about a year and some change, which first test on 200 should be a bounce if we get down there. I don't know if we're going to get there, but let's say best case scenario. So if we go into, I'm just going to use 95. It may not be 95. It could be, 110, but we're going to say 95 just to keep everything even. It goes into earnings at 95. Best case scenario, it pops to the upside. I got us back at right here, right where we were just last week. 110, 115, high of 118. I think we're going to see that level more and more. And I think the 120 is going to be the magic number to break. We break that 120, then we can get back into the high 120s at 127, 128, then back into the 130s and potentially 140. But right now, with the market being in a downtrend, we check the other indicators. It looks like, again, if the market is still red, we could be going down to 95 first, could bounce at 95 and go back up to 100. If you're holding long term, again, right now, the market bleeding like it is, this is the time to, if you're looking at options, plant those leaps, buy some option contracts, set them out to January or beyond, and just wait. Try to get it as closest to, in the money as you can get it, as much as you can afford. And then that way you can set it, get it in the money, set it out to, next year, early 2025, and you can just relax. You don't have to worry too much about the market fluctuations because you have a lot of time on the contract for the price to increase, and you don't really have to worry too much about time decay until you get into that 30-day window. And then if you don't want to worry about time decay at all, just buy the stock. Shares are nice too, right? But yeah, upside from earnings, I got, again, 115 and 120. That's if we go in at 95. I just picked 95 as an even point. If we go in at 95 and we miss, I got us down, worst case scenario, 80, and potentially 91 to 85. Again, if it's a large just destruction blowout, I got 80. If it's just bad, it could be 91 to 85. If it's great, we could be going back up to where we're at, about 112. If it's magnificent, we're looking at high 115, 120, and then we could possibly break back into the 120s, going to the upside. But that's to be seen. Again, if I knew, I would tell you. Any questions on NVIDIA? Perfect. And I am right on time. It is 9:57. I'm gonna tell Mark, hey man, I may not need you now. No, let me stop. But landed right on time, right at 8 o'clock. Let me stop the recording. Give me 1 second. Stop sharing my screen. Also, if you want to see the recording,